Welcome back. You're watching The Money Show with me, Kavita Thapliyal. Now, with the new financial year well underway, it is time to start planning about your investments and tax liabilities smartly. So, on The Money Show today, we will help you do just that. We will tell you how you can manage your tax liability given all the changes that have happened recently. We will also help you decide whether you should stick to the old tax regime or migrate to the new one. Let's welcome on board Tapati Ghose partner, Deloitte India. Tapati, good evening and welcome to the show. We have a lot of questions which are sent to us by our viewers, but then I really want to start with the new tax regime breakup. Now, since that's a default tax regime, if at all you don't clearly mention that you want to stick to the old one, let's refresh and let's once again remind our viewers what exactly are the tax slabs under tax regime, what kind of benefits, few of them were introduced in the budget this time.
Thanks so much, Kavita, and thank you for having me on the show. Okay, that's a good place to start to understand what were the changes, obviously, and we've heard about this a lot, that the new tax regime has been made much more attractive in this Finance Act. First of all, the tax structure has been looked at again. The slabs have been rationalized. The number of slabs have come down to 5. And again, the basic exemption limit has been increased to 3 lakhs. And then with every increase of 3 lakhs, the tax rates go up from 5, 10, 15, 20, and 30. And so as compared to the past, across all levels, the tax liability will come down just because of the way the tax structure has been changed. Over and above that, the rebate under 87A has been increased to 7 lakhs. It was 5 lakhs before. So currently, individuals with income up to 5 lakhs are not required to pay any tax, since the tax on such income is provided as rebate under 87A. And with this budget, with effect from 1st of April 2023, this rebate has been increased to 7 lakhs, which means that anyone getting income up to 7 lakhs under the new tax regime will not need to pay any tax. Standard deduction has been introduced under the new tax regime as well, which is a positive move. Earlier, it used to be only in the regular regime or the old regime. Then for the very high income group, that is for those above 5 crores, there's a reduction in the surcharge from 37% to 25%, making the effective tax rate come down from 42.74% to 39%, which makes it absolutely attractive for those in those levels of income. But overall, it's not that all of these changes result in a positive outcome for all. It would need to be looked at on a case-to-case basis because under the old regime, there are a significant number of exemptions and benefits that are there,
right,
which are lost under the new tax regime.
Exactly. I don't know if it's possible for you, but then could you help us with the onboarding taxpayers which are there on the new tax regime as per new tax regime? Do we have such kind of a number, and is it more? Has it increased?
So till last year, of course, the numbers were not so good, which is why when we spoke to companies across, it was just about 5 to 10% that had opted in for the new tax regime, which is why the government has had to make these changes to make it more attractive. But we'll have to wait and see for FY23 how many would opt in. And the results really would be known when they start filing the tax returns for FY23, which are due 31st July, because that's when the individuals will have to make that choice for certain while filing the tax return.
So, Tapti, let's help our viewers in reviewing the kind of tax regime they should be sticking on to. I would request you to explain this, by giving us an example of someone who maybe earns somewhere between 7 to 10 lakhs yearly and 10 to 15 and then 15 lakhs on. Someone who's taking all the benefits as per the old tax regime. Should there be any reason for them to, shift in or opt in for the new tax regime? In what should be the criteria?
Let me take two examples. I mean,
Sure.
for those below, say, 7 lakhs, as I mentioned, it's really not much of a choice to be made. There's no tax for those under the new tax regime, so we'll keep those aside. Let's take an example of somebody who has income from salary of about 15 lakh. Under both the regimes, you're entitled to a standard deduction of 50,000. You're allowed a deduction of profession tax of 2,400 under the new tax, under the old tax regime, sorry. And say the person has a housing loan interest and a deduction of 2 lakh is allowed under the old tax regime. Say the person has interest from savings and interest from FDs. That income is taxable, of course, for under both the regimes. The person may be staying in a rented accommodation and is entitled to claim a rent allowance deduction under the old tax regime. Say that's 1 lakh. The person is entitled to, say, a leave travel concession of 50,000 under the old. Taking an example, of course, these numbers would differ person by person. LTC of, say, 50,000. ATC deduction for, say, life insurance premium payments, PF, PPF, housing loan principal payments, say 150,000, which is the limit that's there. You could be contributing to NPS, an additional contribution for NPS, say, of 50,000. Employer contribution to NPS could be 1,50,000. You could be having a Mediclaim premium of 25,000. Because you're earning interest from FDs, you'll be entitled to AT-PTA of 10,000. Putting all of these together, most, except for the standard deduction, none of the other deductions and reliefs are available under the new tax regime. So the outcome as such for a person at 15 lakh, you would have a tax liability of about 70,000 under the old tax regime and about 1,30,000 under the new tax regime. So obviously, if the amount of deductions and exemptions that are available are significant, the old tax regime wins hands down. And in this particular case, there would be a savings of about 60,000 rupees if they go by the old tax regime. So that's just one of the examples. We could take a similar case as far as somebody who earns 10 lakhs and with a similar kind of deductions and exemptions that are allowed under the old tax regime, but not allowed under the new tax regime. They would not need to pay any tax under the old, but would have to pay about 48,000 under the new tax regime. So in these cases as well, the old tax regime continues to be more beneficial. But of course, depending upon if the number of deductions and exemptions are not significant, then one would need to do a determination based on what is the quantum of investments, what is the long-term financial plans that an individual has. Do I have year-on-year housing loan interest, for instance, that has to be paid? Can I claim a house rent allowance deduction on a year-on-year basis that I can't switch off? Based on all of those, you need to really decide whether one works better as compared to the other.
This homework and this assessment needs to be done from the taxpayers' angle. But then I also want to understand how many times, salaried individual and businesses, can they opt in and opt out from the tax regime, new tax regime, or is it just once in a lifetime opportunity that you get to decide which tax regime you want to choose?
So on an overall basis, salaried or not salaried, if person does not have income from business and profession, they can make a change on a year-on-year basis. Now, if I look at the perspective of a salaried individual, because there the tax withholding norms come into play as well. In fact, there was a CBDT circular clarifying the norms that was released yesterday, which basically said that if at the beginning of the year, the employer will need to seek information from every single employee as to whether they would want to go in for the default new tax regime, or whether they would would opt in for the old tax regime. Remember that there is a flip from the current year, because the new tax regime is the default from this year on. And if the person does not make a choice, does not provide an intimation to the employer of his choice, then the employer goes with the default new tax regime. And that continues for the rest of the year. But at the time of filing of the tax return, the individual will, of course, need to specifically call out the option. And in the event that he chooses to opt the other way, as in go in for the regular tax regime at the filing tax return, he can very well do so at that point in time, but may possibly have to deal with some refunds at that point.
Sure.
So, are you with me?
Right, right. All right, so very crucial for taxpayers to figure out which tax regime to stick. And even if you plan to move on to the new tax regime, it's very important to hold on to your old tax regime investments that you might be just doing for tax benefit, but you need to sit down and analyze all of those investments now and then align them with the financial plan and strike out the ones which are really not needed, or maybe the ones you were using only to save tax. Thank you so much, Tapati, for being on the show and helping our viewers with that today. On that note, we'll take a quick break. Post that, let's get your portfolio related queries answered by Arnav Pandya.